What's happening? So, I want to go over my trade yesterday on JCS, and it was a red trade. It was a bad red trade. So this is probably one of the worst trades I've ever had. And it's not, when I say trade, it was obviously a bunch of trades, but like obviously like the day trade on this stock was absolutely atrocious. And I hit my max loss on it. I paid a bunch in commissions trying to, basically trying to chase it. And I kept trying to short it and catching these moves down, and I did nice. Like at first, I was green. I was green for a good little bit, and then I just kept trying to chase it as it bounced towards the VWAP. I kept trying to short it, catching these tops, hoping it would rip down, and it just didn't. And this is the definition of death by 1,000 paper cuts. This is why you don't trade like this. Just understand that I want you guys to take lessons away from this trade, because this kind of trade is the kind of trade that is a good example of what not to do. It's the perfect example of what not to do. And I learned from it myself. And I'm not a professional. I'm still learning. I'm still understanding, and this is emotion. A lot of times like when you're in this kind of it takes over. Like you don't even feel the emotion when you're making these trades a lot of times. Like that's one of the scary things about trading is how easily you can kind of just get into that mentality of having a bias, and then allowing your bias to kind of take control of your emotions, and then allowing your emotions to take control of your trading, and then giving yourself a big smack in the face, or like I did here, death by 1,000 paper cuts. And so what ends up happening here is that even though I'm green on the first couple trades, these trades, as I start to get short and it goes against me and I cover, you know, they're not big losses. Like these are like 10 cents, maybe like, 15, 20 cents. But the problem is, and each trade is costing me like, 50 cents. Either, all of these trades are like 50 cents, So they're not insane commissions. But the problem is that when you get enough of them, when you get these little 10 cent loss, 10 cent loss, 10 cent loss, 10 cent loss, 20 cent loss, 20 cent loss, 20 cent loss. And one of these over here was almost $1 loss, because I don't know, for some reason I held it, and then I would cover half when it went against me, and I would hold and hoping that it, okay, I'm just gonna, and then I would re-short hoping that it would come against me, and it didn't. So then I'd cover again, only half, and I don't know what I was thinking. I was honestly like, that it's just so stupid, guys. Have You need to have a plan. This is the problem with this right here, is I don't have a plan. Like, I shouldn't say that. I have a plan. Like, I had a plan right here. The problem is that I take my profits too quick, right? I take my profits too quickly, and then basically once I take my profits too quickly, I try to get in again, hoping that, oh well, now it's going to move again in the direction I want it to, so I'm going to get in again and catch those profits. And then, the move already happened, so then it starts moving in the opposite direction. And then you're like, oh well, I think it's going to move down, so I'm going to add. I'm going to keep adding, right? Because as it goes up, you add to your position, your short position, knowing that if it goes down past the price where you first shorted, then you're going to be good, and you're going to be bringing your cost base average up, so you're going to be even more profitable. Problem is though, is that when you do this at a scale where you're getting in, you're getting out, you're getting in, you're getting out, you're adding, you're cutting half, you're adding, you're it's like you're covering half. You're just, especially if they're all losers, what you're doing is you're basically just giving yourself many little cuts that end up bleeding your account dry. And this is how you lose money. This is how you blow up an account. This is how I almost blew up my first account, is doing this exact thing. And it's even like today, I told myself, like, Mike, we're just not going to short. I'm going to stop shorting, because with shorting, like, I feel more confident shorting than I do going long. Many times because I can see the shorts coming a lot easier than I can see the longs. Like here on Cone, like once it doesn't break the VWAP here, you're clear that, hey, if I get in here short in this consolidation, I can get out of the VWAP. Problem with trading long is that you can take that same mentality and you can be like, all right, I'm going to get in at the VWAP. So this thing breaks VWAP, you get in here, right, when it comes down and maybe holds VWAP. So you get in here at VWAP at 917, and then the next candle opens and flushes down to to 870, 850. Next thing you know, it's at 850, you know, and you just lost in like, and I don't know. I find that it can move against you a lot quicker than, you know, especially when you're trading these low float stocks. So I don't mind going long on higher price stocks, but when you're trading these lower price stocks and, you know, that are low floats, you have a lot of volatility, so it gives you these kind of big moves, which is why, you know, a lot of times I tell myself I need confirmation before I get in these trades. And here's the thing about JCS is that these last trades were all winners. And if I would have just taken this trade here and then maybe another trade here and then another trade here, this would have been an amazing trade. This would have been perfect. And this is what you need to do, is you need to trade these ranges, right? As it goes down, you don't want to be shorting down here. You want to short at the top. And then as it comes down, you want to be covering and you want to be shorting. And I know it's hard to understand like when it's going to stop, but you need to be able to cover some of your position, or at least get yourself in a position where you can be profitable trading trends rather than trying to catch every candlestick, right? So what that means is that you need to trade the trend and getting in at positions and holding those positions regardless of what happens, right? Kind of like I did on KMPH today, right? So my KMPH trade today, I got in consolidation in this area, and then I held waiting for that move. I wasn't going to cover. Well, you know, I did cover, and then got back in at a better, with a better average price, knowing that like I would lose a few cents, but then I could get back in with a decent price average, and then be in basically at $16, which is exactly where I wanted to be in, right? So in that sense, you just get in and you hold. The trade does what it does. You know, you either are going to make your profits or you're going to hit your loss, but at least you know how much you're willing to lose, and you know how much you're willing to take once the profits hit. The problem with doing what I did on JCS is that you don't really have an idea of where you are, because you're in this trade and you're trading so quickly and you're in and out, you're in and out, you're in and out. You know, I have an idea of what my max loss is, but without an idea of like where I am in the trade, where my cost average is, how much I'm already down, like, because when you're in these minute, you know, these are minute sticks. So when you're in this, you're not looking at your P&L. You're basically just trying to trade the chart and try to get the best outcome, right? And, you know, I was down quite a bit at the top here. I was able to make some of it back with these last few trades, but it really was just a bad day overall. And it was just a terrible day trading. And not only, you know, will you pay so much in commissions when you trade like this, but it's so hard to be profitable because stocks will be volatile. That's what they do. They move around. They consolidate. They go up. They go down. You want to be able to predict the range rather than trying to trade the candlesticks. And what that means is just understanding that you're going to get in at a certain position and you're going to be able to have an idea when you get in, right? So this is why I like this KMPH trade today is such a good example of having a plan. The plan is it broke down below the VWAP with good volume, showing you that it really doesn't want to reclaim the VWAP with any real, you know, significance. So then you get in short and you hold that short, knowing that it's probably going to go against you there, right? Or, you know, go to the downside. It's going to flush. And if you can get in for that consolidation, once it flushes, you're gonna have a nice trade, and you're not constantly trying to catch little 10 cent, 20 cent moves here to, you know, basically end up paying more in commissions than you make from the actual trade, and leave yourself in a position where you're not catching that big move, right? And this is something I tell myself again and again and again, you know, as I learn and as I go over my trades. And one of my major things that I constantly write down and I constantly tell myself is, do I have an order out on KMPH? No. Okay. It just looks like I have a limit order out at 16, but I don't. But anyway, so what you want to learn, what you want to take from this is that when you trade the trend, you're so much easier. You know, you have such a higher rate of profitability just understanding that you're taking one or two trades, and if they don't work out, they don't work out. But at least you're not giving yourself 1,000 losses, small tiny losses that add up to be huge, you know, cumulative losses in the end. So what I mean by trading ranges is this here, right? So Rocket, once this thing breaks down below the VWAP, you can get short here. And just knowing that, okay, well, I'm getting short. It's been running for the past 2 weeks. I'm going to hold this short, knowing that, you know, if it breaks back above the VWAP, yeah, I'll stop out. But if it keeps going down, I'm going to keep holding this, and then, you know, maybe cover once I hit my 10% goal, or once I hit, you know, maybe here when it starts to bounce, you cover, you know, in this range here, it's still giving you a nice trade, a 10-15% trade, right? And then once it gets down to the bottom, hits that $31 range, you know, you're kind of sitting in here like, okay, well, maybe this is the bottom now. So you get in long and you hold this to the upside. This is trading the range, right? You trade the range down, you trade the range up, right? It's the same what I did on KMPH here, right? People traded the range up. They were doing it all morning, and then, you know, started to go up. I saw it showing weakness and wanting to go down, so I started to trade the range down, right? And obviously it could have gone against me, but I was getting in anticipation with a plan. And that's the biggest thing. Have a plan, guys. Always stick to your plan. I know that's probably the thing that every trader says, but it's harder said than done, and you will learn that again and again and again, and you will take hard lessons to learn it. And this JCS trade is just a perfect example of how you can screw yourself very quickly. And very quickly you can give yourself a very, very, you know, big loss. And you can, you know, look back on it, and like I said, it's clear what happened. It's clear the problem. It's clear that my emotions took control, and this is what happens when emotion takes control of your trading. And when you have a bias towards a stock, and you want that huge win, and you're just like, man, this thing's gonna go down. I know it's gonna go down. I'm not gonna give up on it. I'm not gonna keep, you know, you keep stopping out, but you're like, oh, but I know it's gonna go down. I know it's gonna go down, and you know, it did go down. It did, but not until the afternoon. And that's one thing, you know, it's like sometimes if it doesn't work one or two times, just get out and wait and come back later on in the day, like live to fight. Because after this, like, I hit my max loss. I'm done for the day. I'm not only done for the day, I'm depressed. I'm emotional, and just not a happy camper. And so if you have this problem, guys, just after one or two losses, just walk away. Stop. Keep trying. And if you've taken 5 or 6 trades and they're not working, just walk away. You know, just do it. Just shut everything down, because you can't. You know, and sure, you may win every now and again on these, but more than likely you're going to get emotional, and you're going to lead to big losses. So, and the funny thing is if I just hold this initial position, or if I hold this any of these positions to the close, look at that. It closes at 7:30. I was shorting it at close to $9 at one point, at $9. So that's $2.50 win. You know, and that's the problem with these stocks, is that I know that a lot of times they're going to go down. It's just, when are they going to go down, and when can I catch it, right? Yeah. So that's that. This is what I wanted to go over on JCS, and why I kind of feel that I could have done better, and that this is a good learning experience, but it's a good example of what not to do when trading. And don't let yourself die the death of 1,000 paper cuts. That's going to be it for the video, guys. Thanks for watching, and feel free to like and subscribe. Come back for another one. Have a good day, guys. Bye.